Imagine standing on a train track and hearing the roar of an engine, but you cannot see the locomotive yet because it is hidden by a thick fog of propaganda. That is exactly where the global economy stands in February 2026. Most people are looking at the stock market or their digital bank balance, thinking things are okay, but they are missing the massive wall of debt that is about to hit us at full speed. We are talking about a $9.2 trillion debt wall that is scheduled to mature this very year. And it is not just a meaningless number on a central bank screen. This is a mathematical certainty that will change the way you look at money and survival forever. If you are holding paper silver or trusting digital digits in a brokerage account, you are essentially holding a ticket to a high-stakes show that has already been canceled by the House. Welcome to Hidden Bullion, where we uncover the truth behind the financial curtains that the mainstream media is too afraid to mention. Before we dive deep into why your paper silver will be worth zero very soon, make sure you hit that subscribe button right now. We are entering the most volatile era of our lifetime, and our goal here at Hidden Bullion is to keep you ahead of the crash with real data and honest insights so you don't get left behind when the system finally resets. Subscribe now and join a community that values real physical wealth over paper promises because the clock is ticking and the exit doors are starting to narrow. The year 2026 was always destined to be a turning point, but nobody in the general public expected the scale of this pressure. The United States and the United Kingdom are facing a situation where nearly 1/4 of their total national debt needs to be rolled over within just a few months. Think about that for a second. We're not just talking about new spending for wars or social programs. We are talking about paying back the old debts that were borrowed when interest rates were near zero back in the day. Now that the world has changed and rates have climbed, the cost of maintaining this debt has become a monster that is eating the entire budget alive. This is the $9.2 trillion debt wall, and it is a cliff that the global financial system is walking toward with its eyes wide shut. While the suits on television tell you everything is under control, the bond market is screaming a completely different story. When this much debt hits the market at once, it creates a massive liquidity vacuum. Everything that is not nailed down by physical reality is going to be sucked into that dark void. And this is exactly where the danger for silver investors lies. I'm not talking about the people who hold the physical metal in their hands. I'm talking about the millions of people who believe that a piece of paper or a digital entry on a smartphone app is the same thing as owning silver. The silver market is one of the most manipulated and misunderstood markets in human history. For every single ounce of physical silver that actually exists in a vault, there are hundreds of ounces of paper silver being traded back and forth every second. This is what we call the paper to physical ratio. And in a normal, healthy economy, the system works because everyone assumes they can eventually settle for cash. But when a $9.2 trillion crash hits cash becomes the very thing everyone is desperate for, and yet it loses its value by the hour. In that moment, the institutions that sold you that paper silver will face a choice. They can either deliver the metal they do not have, or they can simply settle your contract in depreciated currency, or worse, they can declare a force majeure and wipe the slate clean. This is why we say your paper silver could be worth zero, not because silver has no value, but because your claim to it is nothing more than an IOU from a system that is going bankrupt in real time. The gravity of the 2026 debt wall cannot be overstated because it represents the moment where the cheap money era officially dies. For over 15 years, we lived in a world where debt was free and consequences were delayed. But math does not care about political cycles or central bank promises. When those trillions of dollars in bonds mature, the government has to find buyers. But the problem is that foreign central banks are already stepping away. They are trading their dollars for physical gold and silver because they see the writing on the wall. If the biggest players in the game are exiting the paper market, why would you want to be the last one holding the bag? This is the ultimate curiosity of our time, and it is why the price of silver is being suppressed while the demand for the physical metal is at an all-time high. It is because the paper market is the only thing keeping the illusion alive, but illusions do not survive a debt wall of this magnitude. Everything you have been told about the safety of your digital investments is being tested right now. As we move closer to the heart of 2026, the pressure on the dollar and the pound will reach a breaking point. When the government can no longer find enough buyers for its debt, it only has one option left, and that is to print the difference. This flood of new currency will act as a final nail in the coffin for the purchasing power of your savings. In this environment, silver is not just a luxury item, it is a life raft. But remember, a life raft only works if you are actively on it. A picture of a life raft on your phone won't save you when the ship starts sinking, and that is exactly what paper silver is. It is an image of safety in a world that is becoming increasingly dangerous. The mechanism of how this massive collapse happens is actually much simpler than the bankers in London or New York want you to believe because they profit from your confusion. You have to understand that the silver price you see flickering on your screen every day is not determined by how much silver is being used in solar panels or medical equipment. It is determined by the massive trading of futures contracts on the COMEX and other major digital exchanges. These are essentially just massive bets on the price of silver. Now I want you to imagine a casino where 10,000 people are all betting on the same horse race, but the stable only actually has one single horse. As long as everyone is happy taking their winnings in casino chips, the game continues and the lights stay on. But the moment the lights flicker and the $9.2 trillion debt wall hits, people are going to stop trusting the chips. They're going to want to take the physical horse home. That is the exact moment when the world realizes that the physical metal does not exist for 99% of the people holding paper claims. This is the paper silver trap that is set to snap shut in 2026. When this global debt crash triggers a liquidity crisis, every bank and hedge fund will be forced to sell whatever they can to cover their debts. They will dump their paper silver contracts by the millions to raise quick cash, which will drive the paper price down, even as the physical metal becomes impossible to find anywhere. This creates a massive and dangerous disconnect. You might see the paper price of silver dropping to $15 or even $10 on your trading app, while at the same time, the local coin shops in the USA and UK are charging $50 or $60 for a physical ounce because nobody's willing to sell the real thing. This is the moment of truth we have been preparing for. If you are holding an ETF or a silver certificate, you are holding a promise that relies on a middleman. And in a global debt crash, middlemen are the first ones to vanish into thin air. Think about the massive leverage that exists in the current financial system. Some conservative estimates suggest that for every single ounce of registered silver in the vaults, there are over 300 ounces of paper claims floating around. This is a house of cards built on a foundation of shifting sand. The 2026 debt wall is the wind that is finally going to blow the whole thing over. The reason this is happening right now is because the interest on the national debt has already surpassed the entire defense budget. The math has reached a terminal breaking point where the government can no longer afford to even pay the interest, much less the principal of what they owe. This forces them into a corner where they must print more money, which devalues your currency further and makes those paper silver contracts even more worthless because they are denominated in a dying dollar. It is a vicious cycle that feeds on itself and gets faster every day. As the dollar loses its purchasing power, the cost of mining and refining physical silver goes up because energy and labor costs explode. Yet the paper price is artificially suppressed to keep the global illusion alive that the financial system is still strong. But you cannot eat paper and you cannot build a microchip with a digital contract. You need the physical atoms of the metal. This is why the smart money is moving into physical bullion at a record pace right now. They are not buying it because they want to trade it for more paper later. They are buying it as a permanent life raft. When the crash hits, the exit door for the paper market is going to be incredibly narrow. Imagine thousands of institutional investors all trying to exit a burning building at the same time through a single door. That door is labeled physical delivery, and it is only wide enough for a tiny few to pass through. Everyone else gets trapped inside with their useless paper certificates as the entire structure comes down. We are already seeing the early warning signs of this decoupling. The premiums on physical silver coins and bars are starting to separate from the fake spot price. This is a clear signal that the market is losing faith in the paper price and moving toward reality. The 2026 debt wall is not some wild theory. It is a scheduled event that is already written into the bond market. Those bonds are already issued and those maturity dates are set in stone. There is no magic wand or secret policy that can make $9.2 trillion of debt disappear without someone taking a massive loss. The only question is, who is going to be the one to lose everything? Is it going to be the big banks who are protected by the government, or is it going to be the retail investor who trusted the paper system? History shows us that the person holding the digital promise is usually the one who gets wiped out. But you have a massive advantage because you are seeing the trap before it actually snaps. You are looking at the reality of the situation, while everyone else is distracted by the latest celebrity news or political theater. The elite are already positioning themselves for a world after the dollar. They are setting up systems for central bank digital currencies and moving their personal wealth into hard assets like gold and silver, while they tell you to keep your money in the bank and stay invested in the stock market. They want you to stay in the system, so they have someone to sell their paper assets to before the crash. This is the ultimate transfer of wealth, and it is happening right under your nose. If you don't have a plan to hold your wealth in a way that doesn't require a bank's permission, you are at the mercy of a system that has already failed. The velocity of this collapse will be unlike anything we have ever seen because of how connected our digital world has become. Once the first major domino falls, the rest will follow in a matter of hours, not days. The timeline for this collapse is not just a random guess, because the financial calendar for 2026 is already marked with specific dates that act like landmines. As we approach the second quarter of the year, the sheer volume of corporate debt maturing alongside government debt creates a double whammy that the banking system is not prepared to handle. We call this the velocity of collapse. When the $9.2 trillion debt wall begins to crumble, it triggers a chain reaction in the derivatives market, which is estimated to be worth over $1 quadrillion. Most people cannot even wrap their heads around what a quadrillion looks like, but think of it as a giant web of bets, where every bank is connected to every other bank. If one thread snaps, the whole web collapses. This is why your paper silver is in such high danger. Those contracts are part of that web. If the bank that issued your silver ETF goes under because they were over-leveraged in the bond market, your claim to that silver becomes a legal battle that could last for decades while your wealth is frozen in a bankrupt estate. This is the hidden reality that we want you to grasp. The system is designed to look solid until the very second it is not. Think back to 2008, when Lehman Brothers was a titan of finance one day and a memory the next. The 2026 crash will make 2008 look like a minor speed bump because back then the government could still print money to bail out the banks. But in 2026, the government itself is the one that needs the bailout. When the lender of last resort is broke, there is no safety net for your paper assets. This is why the shift from paper to physical is not just a recommendation, it is a survival strategy. The USA and UK markets are particularly vulnerable because their economies are built almost entirely on financial services and debt. When the debt wall hits, the heart of these economies will stop beating for a moment, and in that moment, the only thing that will have value is what you can physically touch and trade without a computer screen. Many people ask us why the price of silver has not already exploded if things are this bad. The answer lies in the dark pools and the massive short positions held by bullion banks. They use high-frequency trading to dump thousands of tons of virtual silver onto the market in milliseconds, usually in the middle of the night when trading volume is low. This artificial supply keeps the price suppressed, but it also creates a massive coiled spring. The more they suppress the price while physical demand rises, the more violent the eventual breakout will be. By the time the general public realizes that the paper silver market is a scam, it will be too late to buy the physical metal at any reasonable price. We are talking about a scenario where silver goes from $30 to $300 in a matter of days because the shorts are forced to cover and there is no metal available for them to buy. This is the short squeeze of the century, and if you are holding paper, you will be on the losing side of that trade because your broker will simply close your position to save themselves. The 2026 debt wall is also going to force a massive shift in how we perceive the US dollar. For decades, the dollar has been the world reserve currency because it was backed by the strongest economy and the biggest military. But a currency is only as strong as the trust people have in its ability to pay back its debts. When the world sees the U.S. struggling to roll over $9.2 trillion, that trust will evaporate. We are already seeing the BRICS nations and other global players moving away from dollar settlements. They are settling oil trades in local currencies and backing them with gold. This means fewer people want to hold U.S. Treasury bonds. If nobody wants the bonds, the interest rates must go up even higher to attract buyers, which makes the debt wall even more impossible to climb. It is a mathematical trap with no exit. You need to realize that you are not just an observer, you are a participant in this history. The choices you make in the next few months will determine how you come out on the other side of this transition. This transition will be painful for those who are unprepared, but it will be a massive opportunity for those who understand the value of real assets. As the bond market fails, the capital will look for a new home. It will flee from paper and seek refuge in anything that cannot be printed by a central bank. This is why we see a massive influx of new investors who are just now waking up to the silver story. The supply of physical silver is already tight, and it is about to get much tighter as the industrial demand for the metal continues to grow alongside the financial demand. We are moving into a world where silver will be recognized not just as an industrial metal, but as the ultimate form of protection against government mismanagement and currency debasement. While the $9.2 trillion debt wall is a financial ticking time bomb, there is another side to the silver story that most investors completely overlook. We are talking about the physical reality of supply and demand. You see, unlike gold, which is mostly stored in vaults as a store of value, silver is an industrial workhorse. It is the most conductive metal on Earth, and it is absolutely essential for the modern world. From every single solar panel to the electrical systems, in every electric vehicle, and even the high-tech weaponry used by the military, silver is being consumed at an incredible rate. But here's the catch. While the demand for these technologies is exploding, the supply of silver is actually shrinking. Most silver is produced as a byproduct of mining for copper, lead, and zinc. This means you cannot just flip a switch and mine more silver because the price went up. It takes years to bring a new mine online. And as the 2026 debt crash hits the global economy, the demand for these base metals will drop, causing mines to shut down and further choking the supply of silver right when the world needs it most. This is the perfect storm we have been tracking. On one hand, you have a financial system built on paper silver that is about to evaporate, and on the other hand, you have a massive industrial shortage that is real and physical. When these two forces collide in 2026, the results will be explosive. Imagine the big tech companies and green energy manufacturers realizing that they cannot get the silver they need to keep their factories running. They will not care about the paper price on the exchange. They will go directly to the miners and offer whatever it takes to secure physical delivery. This is called a supply chain squeeze. In this scenario, your paper silver is worth zero because a solar panel company cannot build a panel out of a digital contract. They need the metal. If you own the physical metal, you're holding a resource that the entire modern world is desperate for. If you own the paper, you're just holding a piece of the debt wall that is currently crumbling. The scale of the deficit is staggering. For the last several years, the silver market has been in a structural deficit, meaning we are using more silver than we are pulling out of the ground. The gap has been filled by drawing down existing stockpiles in places like London and New York. But those stockpiles are not bottomless. Data shows that the available silver in exchange vaults is hitting multi-year lows. We are literally running out of silver at the exact same time the financial system is running out of credibility. This is not a coincidence. It is the end of a long cycle. When the $9.2 trillion debt wall hits, it will trigger a panic bid for anything that has intrinsic value. Gold will move first because it is the ultimate money, but silver will move the fastest because it is both money and a critical industrial resource. This is why the upside potential is unlike anything we have seen in human history. Think about the psychology of the masses during a crash. When people lose faith in their currency, they look for safety. For centuries, that safety has been precious metals. But in the digital age, most people have been conditioned to buy ETFs or other paper proxies. When the crash starts, these people will think they are safe. They will watch the price of silver start to climb and feel like geniuses. But then the freeze happens. The exchanges will realize they cannot settle the contracts. They will implement trading halts or cash settlements. Imagine seeing the price of silver hit $100, but your broker tells you that you can only sell your paper position for $30 because that was the price when they halted trading. That is the reality of the paper silver trap. It is a one-way street that leads to a dead end. This is why the distinction between owning silver and owning a claim on silver is the most important financial lesson of 2026. We are at a point where the world is split in two. There are those who understand that value is rooted in the physical world, and there are those who still believe in the magic of central bank printing presses. As the 2026 debt wall draws closer, the line between these two groups will become a canyon. The transition will be fast, and it will be unforgiving for those who waited too long to act. The industrial demand for silver is going to act as a floor that prevents the price from ever staying low once the paper market breaks. This is a once-in-a-lifetime alignment of financial collapse and industrial necessity. Those who see it now and position themselves accordingly will be the ones who navigate the coming storm with their wealth intact. Now we come to the most critical part of this entire analysis, because understanding the problem is only half the battle. Knowing how to position yourself before the $9.2 trillion debt wall hits is what will define your financial future for the next decade and beyond. We have talked about the massive debt rollover in 2026, the inevitable collapse of the paper silver market, and the industrial shortage that is creating a massive supply vacuum. But what does the actual transition look like for you as an individual living in the real world? When the system resets, it will not happen with a polite announcement on the evening news. It will happen over a quiet weekend when the markets are closed. You will wake up on a Monday morning to find that the banking apps are down, or that your brokerage has placed a sudden limit on withdrawals to protect their own liquidity. This is the standard playbook for every major debt crisis in history. In that moment, the price of everything you actually need, like fuel and food, will skyrocket because the currency is losing its grip on reality, while the price of paper assets will plunge into the floor. The strategy for survival is simpler than you think, but it requires massive discipline. You must eliminate counterparty risk immediately. This means moving away from paper silver and digital promises and into physical metal that you hold in your own possession. If you do not hold it, you do not own it, and it is really that simple. When the 2026 crash hits, a vault certificate or a digital silver token is just another piece of paper in a world that is already drowning in worthless paper. Second, you need to diversify out of the traditional banking system as much as possible. Keep enough cash for your short-term needs, but understand that any excess capital sitting in a bank account is essentially an unsecured loan to a bankrupt institution that will not hesitate to freeze your funds. Third, you must stay informed and remain flexible because the rules of the game are going to change fast as the government tries to navigate the debt wall cliff. They might introduce new taxes on capital gains, or even try to restrict the sale of precious metals once the panic starts. This is why getting your position established right now before the mass panic begins is the only way to ensure your family's safety. The window of opportunity is closing much faster than most people realize. If you look at the silver charts from a long-term perspective, we are currently in a massive consolidation phase that has lasted for many years. This is the calm before the ultimate storm. Once the break happens and the world realizes that the $9.2 trillion crash is mathematically unavoidable, the rush into physical silver will be the greatest wealth transfer in human history. Wealth is never truly destroyed in a crash. It is simply transferred from those who held the paper illusion to those who held the physical reality. By taking these steps and following the data, you are placing yourself on the right side of that transfer. You are choosing to be a predator in the market rather than the helpless prey. We are talking about a move that could potentially turn a modest savings account into a generational fortune because silver is so massively undervalued relative to the amount of total debt in the system. If silver were to track the growth of the national debt since 1980, the price would already be in the hundreds or even thousands of dollars. The 2026 debt wall is simply the catalyst that forces that adjustment to happen all at once. As we wrap up this deep dive, I want you to take a very serious look at your own portfolio today. Ask yourself if the assets you own can survive a scenario where the currency loses 30% of its value in a single year, or where the biggest banks in the world are fighting for their own survival. If the answer is no, then today is the day to make a change. Do not wait for the headlines to confirm what we are telling you today, because by the time it is on the news, the price of physical silver will already be completely out of reach for the average person. We are committed to bringing you the truth here because we believe that an educated investor is a safe investor. We do not care about the daily price swings or the Wall Street hype. We care about the fundamental truth of math and the undeniable reality of the physical world. The $9.2 trillion debt wall is coming, and it is bringing a new world with it. Make sure you are ready to meet it with silver in your hands and a clear plan in your mind. Thank you so much for watching this extended deep dive on hidden bullion. If you found this information eye-opening and valuable, please give this video a thumbs up and share it across your social media networks and with anyone you know who needs to hear this urgent warning. Every single share helps us fight the suppression of these financial facts and helps us grow our community. Now we want to hear from you. Drop a comment below and let us know if you think the paper silver market will survive the 2026 crash or if physical metal is the only way forward. Your comments and engagement help the Hidden Bullion channel reach more people across the USA and the UK who are searching for the truth. We read every single comment, and we value your perspective as we navigate these historic times together. Stay safe, stay focused, and most importantly, stay physical. This is Hidden Bullion, and we will see you in the next video as we continue to track the collapse of the debt wall.